Welcome to the Property Nomads podcast. And here is your host, Rob Smallbone.
Welcome to this episode of the Property Nomads podcast. I'm delighted today to be joined by Mark Smith. Part of this mini-series we've got going on, we've touched base with lettings agents, people that are building up portfolios. Well, we've got a different angle for you today, and Mark Smith is a tax expert. He's a barrister based at Cotswold Barristers in Cheltenham. He's well known within the private renters sector. He led the legal team that recovered £27 million of unlawfully charged mortgage interest from West Bromwich Building Society in 2016 on behalf of 6,200 landlords. The case was Mark Alexander versus West Bromwich. And in association with Property 118, he has designed robust strategies to allow rental businesses to incorporate without refinancing, and over 100 businesses have successfully done so to date from the introduction of the BICT in November 2015. Mark, that's one hell of an introduction, and thank you for taking time out today.
It's a pleasure, thank you.
What got you started in law, I suppose, in the first place?
In law?
In law, yeah.
My father was a policeman, and we always used to watch Crown Court on ITV, and that really led me into wanting to practice law. And after 10 or 12 years as a solicitor, I eventually got my dream job to become a criminal law barrister. So I started off in criminal law, and 10 or 12 years ago developed more interest in commercial civil work, dealing with property cases and disputes between businesses. And that was what really led me into my association with Property 118.
What is it about, I say law, that might sound quite generic, what is it that really excites you? Is that what gets you going in the morning? What about it does that for you?
Well, I've been doing it for 30 odd years now, so I guess the excitement levels have diminished somewhat, but still just trying to do something that makes a difference to somebody. I don't think people by and large have a great opinion of our legal system, and anything I can do to use that system to improve their position, whatever position that may be, is something that's, I think, still worth doing.
In terms of today, so a lot of the subjects we're going to be talking about really revolves around tax planning. So some people have different ideas of what different things mean. For example, we're not, I think Al Capone got done by tax evasion, which is different from tax avoidance, which is different from tax planning. So can you touch on all three of those?
Certainly. Tax planning, I guess, is the first one to take, which is the nice version of what we do, which is basically structuring your business affairs in compliance with the law and HMRC practice to ensure that you pay the least amount of tax consistent with your legal duties. Tax avoidance is something which is caught up with by HMRC eventually, which is doing something that doesn't have any commercial justification, something which is done for the sole purpose of paying less tax, where it may be artificial, there may be a lot of moving parts to it, there may be transactions that take place within very short spaces of time. If those things are done for the dominant purpose of paying less tax, then they won't be allowed to have effect by HMRC. And tax evasion is a criminal offence. It's easy to define that.
A lot of people that I speak to, and there seems to be like a big lack of, from the people I speak to, a big lack of sort of information, well, not information that's out there, but people know how to buy property, they know how to do X, Y, Z. But when it comes down to the business planning side and tax efficient strategy side, they seem to not know a lot about it. Do you find that's quite common with the people that you speak to day in, day out?
I do. I speak a lot on the Property Investors Network circuit, and one of the things I like to do is get everybody to stand up in the room, and I get them to stay standing if they've heard of the abolition of finance cost relief, section 24. I get them to stay standing if they know the impact that that's going to have on their business, and I get them to stay standing if they've taken steps to mitigate the impact that it's going to have on their business. And in a room of 60 or 70 people, I'm surprised if I get more than 6 still standing at the end. So it is a matter of concern that I think it largely comes from the fact that people who get into property don't necessarily think they're running a business, and that is not the attitude that I would want to urge on people. If you've got 3 or 4 houses in your portfolio and then suddenly you've got 5 or 6, you've got a business with £1 million worth of assets, and that's something that has to be taken very seriously and looked at from a hard-headed business point of view, and that includes planning to structure it in the most tax efficient way.
Yeah, absolutely, 100%, because a lot of people will get into property and almost go down sort of the hobby route, but in reality, as you say, you can have 5 or 6 properties, depending on where you buy them, you have over £1 million worth of assets. You need to start thinking very differently about that.
Yes, if you own a factory with £1 million worth of equipment in it, or you own an IT business with £1 million worth of computer equipment, you undoubtedly will consider yourself running a business. And so it shouldn't be any different if you've got £1 million worth of houses under your control.
Rolling back to Section 24, and again, I make the assumption that most people that are listening to this are going to know what that is. There might be some that have no idea what Section 24 is. Can you go in depth about that, please?
Yes, it goes back to the Finance Act in 2015. George Osborne's one of his last waves before he lost the job as Chancellor of the Exchequer or gave up the job. It was designed to level the playing field between, as Mr Osborne saw it, the private rented sector and first-time buyers trying to get onto the housing ladder. And his justification for it was, we are subsidising private rented sector landlords in effect by giving tax relief on their finance costs, where that doesn't happen for first-time buyers. So in order to allow people to plan more efficiently, it was stepped. So over 4 tax years, it was reduced from 25%, 50%, 75%, and then in tax year 2021, it's going to be 100% disallowance of finance cost relief as a deductible expense. Instead, what you're going to get is a basic rate tax credit applied to your tax calculation. But of course, a lot of people who are highly geared are going to find a huge impact on the way their businesses are taxed and the amount of profit they can take.
Now, does this apply if people have got properties in their own personal name? Does it apply to companies as well?
That's the big difference. It only applies to people who pay self-assessment income tax on their property income. If you have your business held in a company, you still get the full finance cost relief applied before you compute your corporation tax profits.
Do you think there's a particular reason why the government set it out to be like that?
Oh, I think it goes back to what Mr Osborne's justification for it was, to make things easier for first-time buyers and buyers just getting onto the property ladder to compete with private renter sector landlords. That's the only justification I can see. I don't want to get political and talk about companies who own large swathes of property and perhaps more the natural donors to the Conservative Party, but that is one possible interpretation of it.
Yeah, it's difficult to sometimes, I must admit, not involve politics, especially with current economic climate, and if if Corbyn gets in charge, for example, and he's looking at certain rent controls and bits and bobs, and in reality, listen to Freakonomics podcast recently about that very subject. In reality, it doesn't work. That's what they say. I don't know, but it's very easy to get politics involved, and we shouldn't. Yeah,
I think it will be a complete paradigm shift, if I'm permitted a cliche or two, if there's a change in colour of the government of this country. And if Mr Corbyn does become the Prime Minister, then there's going to be a whole new raft of things that PRS landlords will have to be thinking about, and I can't even begin to imagine what they may be.
No, but talking of changes, as you've been 34 years.
Yes, qualified as solicitor in 1986, so this is coming up 33 years qualified and 2 years training before that. So
that's incredible. So over the time, have you seen periods where there's been not many changes in sort of laws and legislation governing property, and then you get a quick cycle of like we've got at the moment? You've got the fit and property fitness sort of testing that come in on the 20th of March. Then you've got Section 24, as you mentioned, in lettings agent fees ban coming in later on in the year. There seems to be like a flurry of just hammering away at landlords at the moment. Have you found over the time there's a cycle?
Very much so. In the early days of buy-to-let, it was a great thing for people to do, as we said earlier, almost like a hobby that people would do as an adjunct to their day jobs. It's something in addition to the pension fund and something that would be done on the side. And there was a reasonable flow of funds available and not much regulation surrounding those. But when the credit crunch came, and it seems that every time you pick up the paper, there's something else that is being done in relation to landlords. The increase in SDLT for second or subsequent properties, selective licensing, compulsory licensing, regulation of all sorts of HMOs. It just seems that they are considered an easy target by the government, and this abolition of finance cost relief is another example of that. The private rented sector is the only sector of business where your taxation is calculated on your income rather than your profits, and you can't remove or discount some of the expenses before you work out what tax you've got to pay. There's no other sector where that's the case.
Very, very true, and it's I think we're in that sort of area at the moment where, as you say, landlords are such an easy an easy target as such, and people just hammering away. Now, it depends on what way you look at it, because obviously that creates, in the eyes of many people that might be treating property as a hobby, they want to get out, etc., etc. But for other people, professionals, that creates just more opportunity, just another hoop to jump through. Would you think that's a fair assessment?
Well, I think it is. And if you go into it with the mindset of you are the CEO of a significant business, that is the way that you will achieve success. And it is perfectly possible to build up a business sufficient to allow you to do that and nothing else, and provide income for your general living and a retirement plan as well. So if you take it seriously, if you organise yourself properly, then there's no reason why that can't be the case.
When a lot of people get started in property, you hear a lot of go and find the deals, go and get the money, etc., etc., etc. But not, again, we alluded earlier on, not many people seem to think of the very long-term implications, say tax-wise. So from your experience and dealing with different people, when would you say the best time to speak to someone like yourself would be with regards to your longer-term property strategy?
Well, when you've made a decision that you're going to go down this line and develop a property business, then the sooner the better. I've spoken to quite a few younger people at the PIN meetings who are embarking on their property journey, as it's known, and they are being advised by their accountants wisely to start off in a limited company straight away. It makes the financing a lot easier, because the criteria for lending in a company are different from those that apply to personal borrowing, and the ability to get more financial benefit from the business is clear if you run it through a company.
Would you say that everyone's initial position is different? I mean, in terms of, for example, if I'm sat here and I'm earning, £90,000 a year and I'm working in London, would my sort of tax position therefore be different from, say, if I was, on a £20,000 job in Liverpool, for example, but I still wanted to get into property? Would the advice still be the same, or does that depend on everyone's individual circumstances?
Well, hopefully, if you're on that £20,000 a year job and you want to get into property, you're doing so for the purpose of building a business and building a portfolio. So if you reach the level where you should be advised to be putting your business into a company, the question then arises, well, what do you do with what you've already built up? And if you're trying to move those properties into a company, then there's all sorts of problems that arise. If you're a sole trader, there will be SDLT payable, even though you're selling it to a company that you own yourself, which is a significant amount of tax to pay within 30 days of the transaction. There's no deferment, like self-assessment is, where you've got a year or so to plan for it. You've got to pay it within a month, otherwise there's penalties. There's capital gains implications as well, potentially, if what you've got in your hands at that point doesn't class as being big enough to be run as a business. So you've got to think big and make the business scalable from day one, I would suggest, and the only way to do that is to have it in a company. But of course, what we're dealing with is, by and large, people who have gone through the golden age of buy-to-let and have now got significant portfolios. And the question that falls to them is, well, how do I mitigate and deal with the problems that Section 24 abolition of finance cost relief is now causing for me?
And in terms of dealing with that, and feel free to go into it if you want to, I assume that then there are decent and efficient ways of dealing with that for people that might have multi-million-pound portfolios all in their own personal names.
Well, that's right, yes. We've developed, since 2015, when the Section 24 was first trailed, along with Property 118, we've developed a number of strategies to help people keep the businesses afloat in a lot of cases where they are highly geared, but in a way that they can be robust for the future and make sure that they can pass the business on in a healthy state to their chosen successors.
A lot of people get not necessarily confused, but when you see all these sort of stories in the media of like Google or whoever it is, Starbucks, not paying tax X, Y, Z, and a lot of people throw their toys out the pram quite quickly, about that. In terms of property, it's important to reiterate that this is strategic tax planning.
Yes,
100%. It's not. We're not saying trying to create clever schemes to avoid or evade tax. We are literally using what the parameters that HMRC have set out, and we're abiding by them. That is all that's going on.
Yes, that's exactly so. I mean, if this may be caught by a safe search, but if you Google Dutch sandwich, you'll see what the sort of tax planning that some of the companies engage in. And this is what I said earlier about the number of moving parts that there are in some things that are avoidance rather than legitimate planning, where there will be a company set up in a low tax jurisdiction that has the IP for a trademark, for example, where the UK company will have to pay a huge amount to the low tax jurisdiction company for the right to use the trademark in the UK. Things of that sort. We don't don't get involved in anything of that kind. And the thing we do recommend for our PRS clients, we will say, here is the legal provision that allows this to be done. Here is the manual that shows how HMRC interpret and apply the law. And we put all these moving parts together and come up with a solution that uses the rules for the benefit of the client.
Yeah, I'm saying, looking at my, I haven't done a bit of research in this myself, and I'll quote this. So in 1936, a landmark legal case was heard in the House of Lords, which is Inland Revenue Commissioners versus the Duke of Westminster in 1936. And the Duke of Westminster won the case, and the judge, Lord Tomlin, stated, "Every man is entitled, if he can, to arrange his affairs so that the tax attaching under the appropriate acts is less than it otherwise would be. If he succeeds in ordering them so as to secure that result, then, however unappreciative the commissioners of Inland Revenue or his fellow taxpayers may be of his ingenuity, he cannot be compelled to pay an increased tax." That's a very just fancy way of just summarising what you've just said, right?
It is, and there's been a refinement of that since the GAAR, the General Anti-Avoidance Rule, came in, that if Revenue find that you're taking steps with no legitimate commercial purpose to reduce your tax bill, then they are entitled to challenge that and say, we're not giving you the tax benefit, we're going to ignore the fact that you've taken that step. So, for example, you might form a partnership for the purpose of not having to pay SDLT on incorporation of your business, and then try to incorporate the next day or the next month. Well, that won't work. There's a specific anti-avoidance provision that says you have to have operated the partnership for 3 years before you can incorporate, and that's an example of the sort of thing that is now in place. So that is still in principle right, but you've got to be aware that not everything that you do will result in the sort of tax saving that may have been done years ago. But you've got to have a commercial justification for the steps that you take. So, for example, if you want to set up a company, one of the reasons might be you want to attract outside investment. You want to limit your liability liability to your tenants. You may want to create shares to pass on to your successors in a more tax efficient way. All of those things are legitimate commercial reasons why people would want to set up a company rather than hold property in their own names.
And the reason for people not doing that is probably down to the fact that they do not have the knowledge that they can actually do that in the first place.
Well, I think that's right. Again, it comes back to, if you're engaged in a business, then you keep abreast of what is happening at the edges of the business. You need to understand how all the work that you put in is going to be properly rewarded, because it is hard. It's hard work. HMOs and tenants can be difficult to deal with. It's not a 9 to 5 Monday to Friday operation. Boilers don't break down at convenient times, so it is graft, it's hard work, and you're entitled to run it in the best way that you can to make sure you get the most benefit from it.
And as you said earlier on, you are the CEO of your own company, so you should, you will hear people talk about, leverage this, leverage that, leverage this, leverage that, but if you have that fundamental interest or passion in what you do, you are going to be on top of things as much as possible in terms of keeping up with legislation and different changes, in rules and the law, because sometimes things get brought in and they take people completely by surprise.
Yes, well that's absolutely right, and it's people do take a pride in what they do. Most of our clients, if all of our clients, are proud of what they do. They try and promote good standards amongst their accommodation and look after their clients well. Their tenants well. I can think of a number of examples. I won't embarrass people who might be listening by calling them out by name, but I know a number of people who take steps that they're not legally required to do, but really sort of pastoral caring, especially if they've got young people in an HMO, for example, or living away from home the first time. Really nice, humbling things to hear about, and it's not just a question of scraping every last pound out of the investment. They do want a sustainable business, and they want to have that profile and reputation.
Yeah, 6 and 1/2 dozen. At the end of the day, you're in the business to make money. But I like to think we're providing a service as such. And if we can do that to the best of our ability, then that will create that win-win.
Yeah, so a home. I mean, a home is a basic thing that everybody aspires to, and if you don't own your own, then you want the next best thing.
Rolling back to the case with Mark Alexander versus West Bromwich, £27 million of unlawfully charged mortgage interest. That's a lot to recover. Tell us a little bit more about the case, how it came about, and
I will. It goes back to 2013, where the West Bromwich Mortgage Company, which is an arm of the West Bromwich Building Society, they had about 6,500 tracker rate mortgages in the BTL market, where the interest rate was fixed at 1.99% above base. And as you'll know, in 2013, base had bumped along at 0.5% for about 4 years, and because all the mortgages had been sold into the securitisation market, the West Brom were only collecting the money and having to pay money out to the people who bought the income streams. And I guess, although we never knew, that they were actually paying out more than they were getting in. So what they did was increase the margin above base to 3.99% above base. And their argument was, well, it's still a tracker, but we're just tracking it from a bit further away. And as a consequence, that everybody's mortgage interest payments went up, virtually doubled overnight, because of course the marginal rate was 4.449 at that point. And Property 118, Mark Alexander was the lead litigant. He put through his website an action group together with about 400 affected mortgages, about 240 mortgage holders. The West Brom quite cannily said, well, look, we will apply whatever the outcome of this across the board. So in one way, it might be thought of they were trying to divide and rule, but the people who put the money in put enough money in to pay for the case and put a war chest aside for the West Bromwich's costs, because of course they will want to know, well, if we lose, who's going to pay for our legal costs? So we had the argument. We lost the first trial at the High Court in London, but on appeal, Lord Justice Leveson and his colleagues, who you'll know from the Leveson inquiry, found in favour of us on all respects. So we had the unlawfully charged, at that point, 3 years of mortgage interest repaid in a lump sum. Everybody was put back on the same terms as they were before, and we had all our legal costs were reimbursed. So everybody was delighted with that outcome. So that, of course, in terms of Cotswold Barristers, improved our profile in the PRS sector. And then when Section 24 came in, Property 118 said, well, look, you must be able to think of something to do with this. So that's when it is more from the background of property law rather than tax law. But when you know how properties are owned and how you can structure businesses, then the tax law that applies to that is not that difficult to apply once you've got those building blocks in place. So I wouldn't really promote myself as a tax specialist. It's more a property specialist with knowledge of how tax impacts on the kind of structures that we put together.
How did the relationship with Property 118 come about? Because you've done some fantastic work, by the way. Anyone that's listening, go and check out the website. The link will be in the show notes. Some fantastic content on there. How did that relationship come about in the first place?
It really came from the West Bromwich case, because at the time I got involved in it, it's worthwhile pointing out that it was done on a direct access basis, which means although I'm a barrister, I didn't have a solicitor involved. There was a meeting in London with about 100 of the affected action group, where the solicitor who had control of the case up to then made his pitch and I made my pitch, and there was a vote on who was going to take the case forward. And suffice to say that I took the case forward. And so we got a very good relationship with Property 118 as a result. Mark was the lead litigant on that, so his name was all over the press after that, after the success. So that really helped consolidate 118's position as a go-to resource for the PRS sector, and everybody was so delighted with what we managed to achieve together that it was almost a clamour for, well, you must be able to do something about this. So we've developed expertise in it over the last 3 or 4 years, and we've helped nearly 200 businesses to incorporate in that time. We've advised on trust structures, partnership structures, all sorts of other things that have developed over the time, which you can read about if you go to the website, as you've kindly pointed out to the listeners.
Yeah, that'll definitely be in the show notes. So we've had a really good browse. There's so much, great content information. And again, as you say, we're going back to this fundamental point of, you are the CEO of your own business. Okay, yes, it's going to be okay to sort of leverage out certain aspects like the management of the property and so forth. But if you're not up to date with what's going on, in the country, law, legislation, etc., 9 times out of 10, you're just going to be, caught off guard, and that's never a situation you want to be in as a responsible business owner. That
is correct. I mean, 118 has a daily newsletter of things that you need to know, and it's never wasted time keeping up with what they have to say.
Has any law or legislation slipped in that you've not been initially aware about? I have to ask it.
What a question. Fortunately, the sector that we operate in and the taxation that applies to it is always well trailed. There's always a lot of consultation about it, and we've become budget day geeks as well. So we always sit and listen to the budget in full and look at all the coverage and see what's going to impact our client base, if anything. And as things stand, I would say you can take it that we're pretty up to date with what is going to happen and what does happen in terms of the taxation, the law that affects the PRS.
It's a word given at the time of recording and everything that's going on. I hate to bring it up, I'm going to bring it up anyway. Brexit, it's doing my head in. I think it's doing most people's head in. But do you think that's going to have an impact on the way that people are going to structure their businesses in the UK, or is it just such a grey area that we need to wait and see what happens?
I don't think anybody knows how to structure their businesses at the moment. The only effect that I've heard of in going to Property Investor Network meetings and talking to people is that there's a possible reduction in demand, a tailing off of demand from EU citizens. People are less inclined to sign up and more inclined to try and do something short term because they don't know what their future is, even more so than we don't know what our future is. At least we know we'll still be living in the UK, and the EU citizens who've come over, they don't know whether they're going to be allowed to carry on working and residing here. It's just all so unclear.
I suppose a flip side to that, pardon the pun, property people, is that supply is so below demand. I mean, I think I remember reading I read an article recently where you'd have to have a net immigration of 0 for 14 consecutive years and be building the current amount of houses, whatever number that may be, again for 14 consecutive years in order for supply to meet demand. So, I mean, depending on what goes on here, there could be an outflux, but I suppose in reality, although we won't know until we get there, if you're in and you're doing family lets, it's pretty rock solid stuff. Cause,
right. Yeah. I think the demand seems to be fairly constant. People don't seem to have many void periods that we see on the financial information that comes through. So I think it's still a very healthy business to be in. Obviously, you see some of these things at the margins. I remember seeing in the London Evening Paper the garden shed inside the lounge. It was let as a separate dwelling in the HMO, things of that sort. We don't have any clients who go to that lengths to increase the number of beds they can offer, but certainly the demand is there, and there are obviously the well-known hotspots around the country.
Yeah, there's been some interesting articles when you read about sheds or whatever, or I think there was a beach hut recently in Bournemouth or Boscombe, anyway, somewhere down there that sold for, I want to say it's about £25,000. I'm thinking could probably buy a property in Grimsby for that. Not sure you get a better tenant, granted, but it's amazing the disparity, I suppose, between north and south, but it's what it is. I can say that I live in Holborn from Reading originally, so
slightly better weather in Bournemouth is the only thing I was saying.
Yeah, there's nothing like the whiff of the Humber first thing in the morning, but that's a different story altogether. Mark, in terms of sort of top tips to give to people, obviously, you're open for business, as you said, but are there what would your 3 top tips be to people that are either already in property or just thinking about getting into property?
Planning and education is the main one. What I find with property people is they are very forthcoming in giving tips and hints for people who are coming through. So you can go to your local networking meetings. Property Investors Network is a great place to go. You can meet people face to face. Property 118 forums are fantastic. You can put a problem up on there, and you can bet that somebody's had that problem as well. And they will give their advice and their replies, and people will join in. So it's a very collegiate sector to be in that way. So take advantage of the fact that people are willing to share and give that information. And the other tip I would say is one we have alluded to a couple of times during this chat. You are the CEO of a significant business, so don't go in with the attitude of saying, "Oh, my accountant won't let me do this," or "My lender won't like it if I do this." Be a bit more robust in saying to your paid professionals who work for you, "I want to achieve this, make it happen."
So in terms of people that might be speaking to their accountants, again, might be property specialists and so forth, would you then say it's fair to say that it's very complimentary to have someone like yourself working almost side by side? So if your accountant might say one thing, but you might have a lot more knowledge about X, Y, Z, and say otherwise. So would you say it's fair to have both people working in tandem?
Well, I think there's probably a role for us personally in a certain stage in the life of the business. So what we try to do is structure it so that it's robust and scalable for the future. You don't have to come to us every year like you do for your accountant, but we're here to give assistance to people who have been through one of our processes. There's never any extra charge for that. So once it's set up and running, it's basically thrown over the wall for you to get on with, and that is designed that way to make sure that there's no obsolescence in it as far as we can achieve. But of course we're there to give assistance and pointers in the future if need be, but you don't need to keep coming back to us because it's designed to make sure that you can run it in a conjunction with your accountant for as long as you want to.
So effectively once it's set up, barring ridiculous changes in the law or the way that things are done, it's pretty much there and keep your eye on it basically.
That's pretty much it, yeah.
That's fantastic. I'd like to do a bit of a quick fire round, and so I apologise in advance for the questions. The questions, they're not always the best questions in the world, but they always seem to get the best answers. So what would be the best piece of advice you've ever been given?
Prepare. There's never any substitute for knowing what you need to be doing before you start doing it. Preparation.
What would be the worst piece of advice you've ever been given?
Oh, right. It'll be all right on the night, I guess, which is the flip side of, again, no pun, of the best piece of advice I've ever been given.
In the last 3 years, what belief, habit or behaviour has had the most positive impact on your life?
I think people having confidence in what they're doing. I do like to see, especially younger people coming into property, to have confidence and belief that what they're doing is a worthwhile thing, and they can provide something that makes a difference to people's lives. I don't think landlords, estate agents, lawyers, we're not all at the public affection like nurses are and soldiers and things of that sort. But if we weren't here, then the effects would be, well, probably not estate agents, but certainly landlords and lawyers. If we weren't here, I think you would notice soon enough that things were better when we were here.
Fair enough, very valid point, well made. Finally, what one piece of advice would you give to someone that is in limbo over making a decision?
Take the best advice that you can, and don't take a lot of advice, take the best advice. I don't like being put in a position of being asked by a client, well, such an advisor's told me this, and such an advisor, such a person's told me this, or I've heard this. Well, that's fine. I was always brought up to be if you can't say anything nice, don't say anything. So I just don't say anything about a number of pieces of advice that people come to me asking me to comment on. Our structures are robust and tested. They are simple and straightforward, and they work. So if it works for you in your position, great. If it doesn't, then I'm sure there's somebody else out there for you. But by and large, if there's nothing we can do for you, we'll tell you, and we'll tell you early on, and there won't be any fee for that to be done. But there nearly always is. So we do strongly urge you take advantage of Property 118. The consultation process is £400 plus VAT. If you don't get anything beneficial out of it, you can have your money back. No quibbles on that. And then if there is something in the recommendations that will be illustrated for your benefit, then the legal work will come over to us, and we'll push it on. And you'll see the cost benefit analysis before you decide to commit. It's all very transparent.
And that's where that mindset comes in of people will sometimes, look at that initial sort of costing or investment and then go, actually, well, I don't want to pay that, but actually say you set at 400 plus VAT, well, that could save you thousands of pounds, possibly more down the line. So it's better to get it done now and get it done correctly rather than, faff around about, oh, it's going to cost X, Y, Z. It's not about that, it's about the investment that's going to yield in the long run.
Well, that's right. So the 118 bit of software is a fantastic bit of kit. It will tell you where you will be if you stay as you are in 3-5 years time, and it will tell you where you could be if you carry out the recommendations in 3 or 5 years time. You can see the difference. Now the fees fall in between those two sums. So it's a question of investing the fee in relation to the work, and it's always meant to yield a benefit. You should always be ahead of the game, and if you're not going to be ahead of the game, we'll tell you, and then there won't be anything to pay because you won't engage the service.
Very, very poignant, without a shadow of a doubt. And finally, if people want to get hold of you, how do they do that?
You can email me, mark@cotswoldbarristers.co.uk. or you can go to property118.com/tax, and there you will see everything that we've developed together. You can read it at your leisure, book a consultation, and eventually, if something comes out of the consultation that you want to do, you'll be in contact with me for that purpose.
Wonderful. We'll put all those links in the show notes so you can contact Mark. Well, Mark, thank you very much for your time. It's been really informative, and enjoy the Chelsea game. I understand you're a Chelsea fan and they're playing tonight, so enjoy the game.
It is. So that will date this. So in terms of Brexit, April the 8th, lunchtime, things may have changed by the time this goes out. We may be a vassal state. We may have cancelled Brexit. Who knows? Somewhere in between. But Rob, thanks very much. It's been really enjoyable. Thanks for coming down.
Thanks.